So what is index investing? Index investing is when you basically buy a fund that just replicates the market index. The returns here are market linked. This is ideally suitable for someone who is a passive investor or someone who's like entering the markets newly and want to understand how equities work and experiment with it. But most times we are not happy with just market returns. We seek for outperformance. And to get this outperformance, just following the market won't help. You need to dare to be different. So you have multiple other opportunities where you can invest in to get that outperformance. So if you're looking for investing in the index, we suggest probably a little bit exposure on your overall portfolio would make sense to have allocated towards index investing, but not your entire portfolio. Gold never goes out of fashion. It has been a traditional investment avenue for many generations that we have seen. A lot of you may ask whether gold is at the peak of the cycle and whether you should be entering the asset class now. The answer to that is that no, we are not in the peak of the cycle, because usually gold does well in terms of whenever there is a financial crisis. And clearly we are in one, such as low interest rate scenario, the dollar weakening, central banks buying gold themselves, and the central banks are also printing money. So gold will actually retain its value more than the currency itself. So we should look at building a portion of our portfolio into gold as well and take exposure there. An integral part of an advisor-investor relationship is that it should be a two-way conversation. You need to understand that the advisor is actually acting in a fiduciary capacity and is looking out for your interests. So there would be definitely times when there is discomfort in your journey. Like for instance, we bought into pharma over the last 2 years and we've been slowly building positions. And the 2 years were definitely painful. It started becoming fruitful and turning around only in the recent times. So there will definitely be times in your journey where an idea might not look very interesting and appealing to you, but you need to have that conversation with your advisor. If you're not convinced, definitely ask for data points from them to see where they are coming from and why they might be suggesting something to you as well. So what is it that you can do also? So you need to understand if there are any limitations in knowledge with the advisor that you're working with. Understand the biases that you might have as a person, or the advisor could also have a bias. So trying to understand that and reflecting on that would give some clarity. And most importantly, like any other relationship, your relationship with the advisor needs to be built over time and trust. And definitely seeing an entire market cycle with an advisor would help, but it does take a little bit of time. So learning to be patient and staying the course and playing the entire market cycle with them will help you understand their style of investing and how the journey is as well. So coronavirus has impacted our lives in many ways and in different capacities. A lot of investors who came with the mindset of a 3 to 5 year cycle aren't seeing those rewards now. And also a new first-time investors joined the market through the mutual fund space in early 2017-18, and it is frustrating definitely for them to do everything right and not have the desired outcome. So what is it that we can do now? We can first lengthen our investment horizon, adjust to the new normal, realign our expectations, and work with an advisor to understand for course corrections, and also start looking at your portfolio from a holistic wealth creation perspective, ensuring that you have sufficient contingencies, adequate exposure to equity based on your risk-taking capacity, ensuring that you have a good exposure to debt and also gold.